Dead cat bounce is a very popular stock market phrase that refers to a temporary bounce in the share price of a stock after it has fallen significantly. So let's say for example, a stock has gone down, down and down. And after this kind of a fall, when it bounces back a little bit, right? So you see this right here? This bounce right here is called the dead cat bounce. Now the origin of this phrase, in case you're wondering, comes from a very common saying that even a dead cat will bounce if it is dropped from high enough, right? So basically it means that if something has fallen so much, then of course it can bounce back a little bit, right? But it doesn't mean anything. We should not read too much into it. So this is what happens, guys. A stock on an index falls a lot. And I mean a real lot. I'm not talking 5%, 10%, 15%. I'm talking 20%, 30%, 40% and even higher. Now, this kind of a fall draws the attention of a lot of potential investors and traders who are interested in bottom fishing the stock. So they say that, look, this stock has fallen so much. Clearly it has gone down so much. Even if it bounces a little bit, right? Even if let's say it goes 10% or 20%, I can make some serious money here. And of course, along with that, they have some other justifications such as, I know this company, this is a big company, this is not going to shut down tomorrow. The stock will not go down to zero at some point, right? So what the heck, let's just give it a shot. But unfortunately, more often than not, these dead cat bounces turn out to be just temporary and the stock continues its slide on the downside and the poor innocent investors, they get stuck with their investment. So what causes these dead cat bounces? Well, there is a technical reason for that. So when there is a negative news trigger on a certain stock, a lot of traders create short position on the stock. Shorting, for those of you who don't know, is when traders try to take advantage of fall in prices by selling first and buying later, right? So for example, let's say you sold something at 100 rupees and then you bought it back at 90, you essentially profited from the fall in the prices. Now, after these guys have taken the short position and the stock falls down a lot, now these guys are sitting on some massive profits, right? Of course they will say that, okay, I'm making so much money, it's time for me to book some profit. And the way they will book the profit is by buying the shares back. And when enough of these traders decide to book the profit, they create enough buying interest in the stock, which creates this bounce in the stock prices, which is also known as a short covering rally. And this short covering rally creates the illusion among regular investors that it seems like the stock has turned around. It's basically ready to go back up. A perfect example of this will be the case of Yes Bank. So guys, this is the case of Yes Bank. And as you can see that when Yes Bank started falling from somewhere around 350 rupees and the kind of fall that was very massive, the kind of rallies that Yes Bank saw was also very impressive, right? So almost from 150 rupees, the stock almost rallied back up to 300, right? So this is a very powerful rally, but this was also a dead cat bounce. And as you can see that everybody who actually invested in this stock at this point of time, they got trapped. And we actually had a couple of more dead cat bounces on Yes Bank, right? So from here, there was one bounce here, then we had another bounce from here. And then of course at the micro level also, we had a couple of bounces here. So people who bought Yes Bank at 250 rupees or 150 rupees or 100 rupees or 50 rupees, they are all stuck right now in Yes Bank unless they, of course, they incurred the loss already. They're all stuck right now at somewhere around 14 rupees. And in fact, there was a very nice article that was written by Nitin Kamath, the CEO of Zerodha, about the lessons learned from Yes Bank. And he talked about how and where people are stuck, right? So people who bought Yes Bank and at what time did they buy the most, right? A lot of people bought Yes Bank here and they got trapped. And later, a lot of clients, they even bought at somewhere around 50 rupees in the anticipation of a dead cat bounce. And of course, a bounce happened. But at this point of time, anybody who is holding the shares of Yes Bank is stuck in this stock. Now, some of you can argue that, not every stock is going to be like Yes Bank, right? There are some really good businesses out there which do fall once in a while and they give some really great investment opportunities. And I agree with that 100%. So the $1 million question then becomes, how do you differentiate whether this is a dead cat bounce or a great investment opportunity? So guys, this is the litmus test. Ask yourself, Why is the stock falling? Has something fundamentally changed in the business of the company, or is it happening to the market or sector overall? And then the second question that you need to ask is that, is this impact just a one-time damage to the company, or this issue has the potential to keep hurting the business for a long time? And once you have answered this question, you have it, you know exactly what to do. If it's a one-time temporary damage to an otherwise great company, then it can be a great investment opportunity. But if either one of these questions have a negative answer, then the chances are that this might be a dead cat bounce. So guys, based on my experience, barring some black swan event, more often than not, if a stock has fallen 40 or 50%, the bounces that you see in these kind of stocks is most likely a dead cat bounce. So my suggestion will be, don't be a sucker for all these short covering rallies. Don't get trapped in one of these cases, because once you get trapped, a lot of times it is very, very hard for you to recover your investment. So that's it guys, that's the dead cat bounce. I hope that you guys learned something from it. And if you want to test your investing knowledge, investing acumen, we have created a quiz for that. You might want to take it and see how well you perform.